Today we're going to talk about the different types of credit cards, what to look for in a credit card, and how to use them to maximize your credit score. Hi, I'm Genevieve Partsch with Hearthstone Real Estate.
Hi, I'm Kendra Enquist with Strategic Mortgage Solutions. NMLS number 534251.
There are several different types of credit cards available to consumers: secured, unsecured, and store credit cards. Secured cards provide you with a limit based on your initial deposit for collateral and will report to the bureaus as a secured revolving account. Unsecured cards do not require collateral and are reported as unsecured revolving accounts. Store cards, while unsecured, can be used as an issuing retailer.
A major difference between a secure and unsecured credit card is what you have to put into it in order to obtain it. One of the ways to quickly increase your credit score and/or build credit quickly is to get a share secured credit card. You, as the consumer, make a prepaid deposit, such as $300 to $500 in advance to the lender. And then the lender issues you a secured credit card with that matching limit. Because this card is prepaid, the card has almost guaranteed approval. Then every month you should charge $20 to $30 and pay it off. Like an unsecured credit card, secured credit card companies should report to the 3 major credit bureaus. It should only take a few months to get a credit score, but sometimes it can take longer. I always tell my clients to get one immediately. You want to make sure that that secured credit card company is reporting to all 3 major credit bureaus as soon as possible, so you can start the time clock to a great credit score.
If you don't have the money to make a security deposit, consider unsecured credit card. Unsecured credit cards are based on your credit worthiness. Therefore, you want to make sure that you research each credit card to see what fits you best. Interest rates, initial processing fees, annual fees are definite factors you should consider when applying for an unsecured credit card. The most important of these factors will be any fees charged to obtain or maintain the account. You want to avoid the cards that will charge you money to open the account, and you want to avoid the cards that want to charge you any annual fees to have the account.
The reason we did not emphasize trying to obtain a specific interest rate is at this stage of building your credit, your interest rate is not as imperative. Remember, the goal is to charge very little and pay it off every month. If you do this, you will never pay interest on your charges. A great way to ensure you do this is to obtain the card, activate it, set up one of your monthly bills to be paid by that card automatically, and then put that physical card away so that you're not tempted to overspend. Set it up to pay something you already have to pay for on a monthly basis anyways. Phone bill, cable, internet, water bill, trash bill, the list goes on of things that you have to pay every month. The goal is to never have a balance reported higher than 30% of your available limit and try to pay it off in full every month so you never pay interest.
Thank you for watching. Keep following and subscribe to my channel to learn more about credit and home buying tips and tricks. We'll see you next week with more tips and tricks on improving your credit.